This has been a highly requested video for me to cover Uber stock, and I really do think that Uber is due for an analysis today. So let's not waste any time and get straight into it. Uber is actually falling today about 5.5%, and this is due to in Barcelona, there was about 1,500 taxi drivers that blocked the city center to protest against Uber. And this is supporting a proposed law that could nearly eliminate ride-hailing services by drastically cutting licenses. What essentially is happening here is that in Barcelona, people are scared. People don't want to support Uber anymore. People want to support the taxis that are out there, not necessarily ride hailings. This is concerning for Uber investors because in Barcelona, which is essentially Europe, you have about 30% coming from Europe, Middle East, and Africa. Those are Uber revenues. And if this portion were to be attacked or under scrutiny, then 30% of the business may just be at peril here. So we don't know what the actual breakdown is between Europe, Middle East, and Africa, but we can assume that on the worst case, it's about 30%, meaning that there might be about a 30% tack down to the Uber business. But I'm going to read this pro report here on investing.com pro. And if you guys actually like this entire article, make sure that you guys subscribe to Investing Pro down below in the description. I'm an affiliate with them, so I get a little bit if you guys do want to sign up for Investing Pro. These summaries are actually pretty helpful when trying to understand the entire business and its entirety. Now, here's what Uber's executive summary actually says here. Uber technology is one of the leading global platforms for ride-hailing, food delivery, and freight services across 70 countries and 1,500 cities worldwide. The company has demonstrated impressive financial performance with Q3 25 earnings showing a $1.20 EPS, which is beating forecasts by 73%. Revenue also beats at $13.47 billion versus $13.26 billion. So beating on both sides here. Now, despite the strong results in their latest quarter, Uber stock actually saw a 7% drop due to the undisclosed legal and regulatory matters. There's a lot of scrutiny under the legal and regulatory matters, so which is why there's uncertainty is bringing the stock down. The company had achieved record adjusted EBITDA of 4.5% of gross bookings, up 40 basis points year over year, with trips growing at their fastest pace since 2023 at 22% and gross bookings increasing by 21%. Now, Uber continues to execute on strategic initiatives, including its hybrid network across autonomous vehicles, recently launching partnerships with NVIDIA, Stellantis, Foxconn to develop a new and deploy level 4 autonomous vehicles. The company is expanding beyond its core ride-hailing services into grocery and retail delivery, reaching a $12 billion run rate. The improving margins across segments with delivery business margins doubling from 2 to 4%. Looking forward, Uber projects high teens growth in gross bookings and low mid 30s growth with adjusted EBITDA for Q4 25. The CEO outlined 6 different strategic initiatives that they are going to continue focusing on, including lifetime experience enhancement, autonomous vehicle integration, local commerce expansion, multiple earning opportunities for drivers, merchant growth, and generative AI integration. The company faces regulatory challenges and competitive pressures in its strong market position, diversified offerings, and technological innovations positioned for well and continued growth. Now, in the latest financials, you can actually see how the revenue is broken down here. It's broken down into delivery, freight, and mobility. The biggest being delivery and mobility. Mobility, $28 billion. Freight being $5 billion, the smallest piece, and delivery being $16 billion. Of that, they are actually able to generate $50 billion in revenue. The cost of goods is $32 billion, with the gross profit being about $17 billion. A lot of this is funneled into SG&A paying off workers, as well as the R&D team to create a better app. And then they're left with $4 billion in operating profit, with $10 billion that they need to pay in income tax and $16 billion of net profit at the end. Keep in mind, this is the last 12-month financials. And in their most recent quarter, they announced $13.5 billion of revenue with a net profit of $6.6 billion. So I kind of want to look at the SWOT analysis here, the strengths and weaknesses, opportunities and threats of the company here. Some of the strengths in Uber, there is market leadership in ride sharing and food delivery across the 70 countries that they operate in. Now, this is going to attribute to their large user base of 187 million monthly active users. And it's really difficult to get a lot of people to use your app. It's the reason why they've partnered with other companies, especially autonomous vehicle ones, because how do you get people onto an app that want to get rides? Uber has already built that out over the years, which is why their asset is going to be so much utility when it comes to the marketplace here. And if I am a business that wants to do ride hailing or ride sharing, I'm definitely looking at Uber to see if I can utilize their platform already. You know how hard it is to get users onto an app? It is extremely, extremely difficult. So, which is why this makes sense. There's also a diversified business model when it comes to Uber. They have mobility, delivery, freight, and new initiatives like advertising. So, it kind of comes into play like when you're waiting for a app or when you're waiting for a ride, you need to wait for a good 3 to 7 minutes. And that 3 to 7 minutes, you are attentive because you don't want to miss your ride. And if it's gone, you got to book another one and waste more money. So you're attentive during that time. So they might flash you some ads. Also, in the back end, Uber knows where you're going. It knows where you go every day. If you're going to Chipotle and you're driving to Chipotle, well, not driving, but you're getting a ride service to Chipotle, then maybe it'll give you Chipotle ads, some targeted ads to get you back into the restaurant. That's a long-term goal, but don't ever count on ads because ads are extremely profitable with gross margins at about 80 to 90%. So the ad business might actually be very big for Uber later on. Now, some of the weaknesses I want to point out here is that Uber is highly dependent on independent contractors using Uber, and that is going to face regulatory challenges and potential increases in labor costs if drivers are reclassified as employees. We know this has been an ongoing battle. Like, do you cover insurance for drivers? Are they actually workers? They're not workers because they're independent contractors. So you are outsourcing the labor to somebody else, but they do not fall under the Uber employee headcount, which could cause trouble. With more people under your headcount, you have to pay for insurances, life insurance, health benefits, all of this nature. But if it does actually happen that Uber needs to cover that, this is going to hurt the bottom line. Some of the opportunities I want to call out here are the strategic partnerships with companies like NVIDIA, Stellantis, and numerous autonomous vehicle developers. Now, this is going to position Uber and benefit from reduced driver costs. If you don't have a driver and there's none of this, I need to pay for their benefits, or what if they get into an accident, like their insurance policies under that, this is going to reduce the costs of doing business for Uber. They also can expand into grocery and retail delivery beyond the current $12 billion run rate. We know that Amazon has just gone into this business. Will Uber follow suit and take into that market? Who knows? But it could be an opportunity that they might want to seize on. They're growing cross-platform engagement with only 20% of consumers currently active across both mobility and delivery markets. This could actually grow in the future. If they can get more people onto the app, then this will grow with bookings to get people from one place to another. But I believe that Uber already has a strong foot in this area where Uber has hit verb status, where you are saying, let's take an Uber to go to Central Park instead of let's take the subway, or let's take Lyft, or let's take a ride hailing service. People are saying, let's Uber somewhere. And some of the threats here might be that Lyft is going to get into delivery. This is going to take over. They already are competing against DoorDash, and they have their Uber Eats business that they need to very much heavily place on the map. There's going to be direct competition from companies like Waymo and Zoox that enter the autonomous vehicle space. If there is a better business out there, like let's say you don't need to sit in a random person's car, socialize with them, and you just want to get from point A to point B, then maybe Uber or Zoox takes the cake. But it's a good thing that Uber is working with autonomous vehicle companies to get their foot out there, because we already know that Waymo is very big. They're expanding to new cities. Zoox also expanding to new cities too. So this is going to be a bigger problem that they're going to face in the future. I wouldn't count any of these big players out because we know that Waymo is owned by Google and Zoox is owned by Amazon, both big players that can throw money into this fire pit if they do want to win. But I want to look at Uber just as a company. How are they performing? And let's just see where the valuation lies here. If I'm going to go to the trailing 12 months here, we can see that revenue growth is actually growing at 18%. This is very great for any company out there. Revenue growth at 18% while their net income is actually growing at 278%. And what's been the driver for profitability here? It's misleading because this difference here is about $4-ish billion. And that is going to come from a one-time tax event. Now, this is the reason why you kind of need to look into these kind of things, because you see a growth year over year of 278%. You're like, wow, that is insanely good. But the reasoning is due to something else, a one-off thing. So if you take into account all of that, you're actually going to see that the PE ratio is going to be something that it shouldn't be at today. The PE ratio is about 11 today. But realistically, if you take this one-time tax event into account, it should probably be trading anywhere between a 23 to 25, which is why the forward PE is about 25. So you're buying a company at a 25 price to earnings ratio. And for a company that has a return on equity of 72% and return on assets of 5%, return on invested capital of about 8%, return on invested capital of 8% seems to be on the lower side here. But something that I do want to focus on is the free cash flows, because the free cash flow of a company is really telling of where it will go in the future. And if they can continue that growth, the stock will likely do well. As time and time again, we know that the cash flow is going to drive the stock price most times. So we're going to go to the cash flow statement here, and we're going to look at free cash flow growth. Free cash flow has grown about 45% year over year, but we can see that it's actually slowing down. What's the reason? Maybe they're just throwing more investments out there. Maybe they're not being as efficient with their money. But if they are dropping from 80% to 45% free cash flow growth, where is it going to go in the future? We don't know. So we need to make assumptions on where this free cash flow might go. But for reference, the company has been increasing free cash flows insanely year after year after year. You cannot count this free cash flow growth monster. If you would have invested at once they turned free cash flow positive, you would be up insanely by now. But the free cash flow, the price of free cash flow is you're paying at about 20. So let's use a DCF. And if we're going to use this DCF of Uber here, we can actually see that if we put in a price to free cash flow of 20, which is what it's trading at today, and we get a discount rate of 12, and a free cash flow growth of 15. This is sandbagging but we're going to say for the next 5 years, we're going to get an average of a free cash flow growth of 15%. And the fair value today is actually $115. The current price is $84. This is a 26% discount to where the fair value is. If it does grow at 15% year over year, then this is going to get you about 20% year over year gain. That is incredible for any company. And I do actually like Uber at the price that it is today. But given that there's so much regulatory risk, does the Uber business model become under scrutiny due to the different regions in which they operate in and the regulatory risk there? I do like Uber today. I think it's at a great value. I think it's at fair value, but I don't think it's at a steal no-brainer deal. I think I really kind of want to own the company in the 70s. And if I can get my hands on shares in the 70s, this might be a worthwhile investment to own. Just because if I were to take a ride-hailing service anywhere, it's probably going to be Uber or Lyft, whoever is giving me the most adopted price. But I sometimes just don't want to check the prices. I just want to take an Uber and go home. So like many people say, Uber is really great at getting you home from the bars. But if they can actually get an autonomous vehicle fleet out there, get rid of a lot of drivers, and you become this different service later on and you adapt and you integrate while maintaining an ad growth business, then maybe free cash flows actually increase. Maybe free cash flows go to 18%. And then at 18%, you're seeing a 23% year over year gains. This is immense, but let's say later on there might be competition from Waymo, Zoox, and the premium just isn't there. You're gonna maybe see a 15, and you're gonna see free cash flows drop to maybe 13%. Let's say 14%. You're still getting a 13% year over year gain, which is great because if you believe in the Uber business model to continue and grow their free cash flows over time, then you should be rewarded. It makes sense here in the calculator that you will be getting a great return, higher than the S&P at least. So where is my head with Uber stock? I think Uber stock is a buy today, but I do really want to get a steal deal because I am so damn greedy. Because if I can get this stock to sell off a little bit, hopefully it sells off, then scoop it up at great prices, I will be very well positioned for a great run out in the next couple of years. I really do think that since we do see negative sentiment now with protesting, hopefully this stock drops a little bit more and I can get my hands on shares in the 70s. If that does happen, then I think I will pick up shares. We're at 84, 70s aren't too far away. Maybe I'll set orders at $79. But that's what I think of Uber today. And if you guys are invested in Uber, let me know, does this entire stock analysis thesis line up with yours? What is your price target for Uber? What do you think Uber will do in the next couple of years? Do you think that Uber is a great investment today? Let me know in the comments down below. If you guys made it to this point in the video, thank you guys so much for watching, and I really appreciate all of you guys to stay here until the end. So that's it. Thank you guys so much. Peace out.